So moving on to our second panel discussion for today. It is titled, Navigating the Future, Sustainable Fintech Trends. Our panel is led by Dr. Renard Su, Group Head of Corporate Sustainability of Yinsen Holdings Berhad, as our moderator for today. And Dr. Renard is joined by our four panelists comprising of Sharifa Sarah Said Muhammad Tahir, Chief Business Officer of Group Institutional Banking, Bank Islam Malaysia Berhad, Liu Oi Han, Founder and CEO of Halogen Capital, Datuk Fazli Abdul Wahid, Senior Vice President, Head of Digital Transformation, Malaysia Digital Economy Corporation, MDEC, and Ian Lloyd, Chief Digital Officer, Kenanga Investment Bank Berhad. Kindly put your hands together for our panels today.
Good afternoon, everyone. My name is Renard, and I'll be moderating the second panel session of the day. We have a very interesting topic, like navigating the future of sustainable fintech trends. So really, we'll be exploring the intersection between finance, technology, and also sustainability. And to help us sort of unpack a little bit more on today's topic, we have a lineup of four, very well-versed subject matter experts. On my far right, there's Dato' Fazli. He is the head of digital transformation for industries. And then on his left is, of course, Puan Sharifa Sarah, the Chief Corporate Officer of Bank Islam. And then followed by Mr. Liu. He is the founder of Halogen Capital. And to my right is none other than Ian Lloyd. He's the CEO of Kenanga Digital. So welcome, and thanks for joining this panel. Now, we all know that when you talk about fintech trends, sustainability, I think it's obviously one of the hottest topics that's currently trending. We have heard about sustainable supply chains and how AI blockchain is actually helping to improve, to a certain extent, some degrees of transparency on ESG matters. But also on the flip side, we have also heard about how data centers that are coming on board has actually led to about 40% increase, right, in some of the emissions. So is technology, AI, blockchain really helping us drive more sustainability impacts, or is it the other way around, right? So perhaps we can start off with, getting some views from our panel, and I'll maybe start off with Dato' Fazli. If you could sort of maybe share a little bit about MDEC, some of the roles, and where do you see some of the trends are as far as sustainable fintech is concerned?
First and foremost, on behalf of MDEC, I'd like to say thank you very much to the organizers for the kind invitation for having me to be part of the panel for today's session. So with regards to the MDEC's view in terms of promoting our sustainable fintech ecosystem as a whole, first of all, MDEC is basically the leading agency when it comes to promoting the digital economy as a whole. Now, being the leading agency itself, obviously we are at the forefront in terms of leading everything with regards to the innovation side of it, as well as the sustainability. And this is cutting across various sectors that we've identified, which includes fintech. We have identified 9 sectors that will basically move the needle with regards to the GDP, in terms of we are right now at 23.3%. Contribution for GDP with regards to the digital economy. Our aim is to move towards 25.5% by the year of 2025. So fintech, digital fintech, or digital finance, in this is what we call our department is basically coming up with high catalytic projects that will basically innovate the industry as a whole. So forefronting the leading, as well as leading all the innovation with regards to sustainability, there are 4 main areas that we are basically focusing on. One is with regards to innovation, as well as the ecosystem. This is where MDEC's role is basically, we have been involved in providing or developing platforms for startups as a whole. We have, this is where we look into having hackathons a lot of hackathons done with all the ecosystem partners, the incubators, as well as the accelerators. And when it comes to the sustainability part itself, we had been collaborating with various agencies in coming up with sustainable type of programs, the likes of Fikra ACE, the likes of the Royal Award Islamic Fintech, which is by Bank Negara, the RAIF Impact Challenge, they call it, as well as the Malaysian Digital Hub itself. That is from the innovation as well as the development of the ecosystem. The second point is basically with regards to the funding as well as investment. This is where MDEC's role as a development agency with regards to everything digital, we are connecting all the startups with the likes of all the venture capitalists, the angel funds, as well as having various numbers of grant programs available in the markets for the startups. And one of that is basically looking into MDEC's investors matching program that we have developed for the startup ecosystem itself. That's the second one. The third one is basically from the level of the perspective of that talent development. From the perspective of talent development itself, we recognize that there is a need to invest a lot in terms of educating and training the rakyat as a whole, or the business as a whole, and equipping all the industries with regards to skills, especially what mentioned by our moderator, Doctor, in terms of the tech enablers or type of future tech enablers such as AI, blockchain, IoT, and so on and so forth. And this is where we have our MD workforce training program that we've developed for the whole ecosystem. And the fourth one being the adoption. Now, we can't run away from having the element of adoption for new technologies moving forward. Hence why adoption in play with regards to new technologies that's going to be introduced in the later future. This is where we will come up with all our high catalytic projects and have all the ecosystem partners, especially in the digital finance ecosystem, to try to adopt new technologies moving forward. And this is basically looking from the perspective, again, from the perspective of AI, blockchain, and IoT. And we have basically been quite successful in coming up with new high catalytic projects that will be able to move the needle from the current 23.5% to at least 25.5% in terms of the GDP for the digital economy. So that's basically in a nutshell that we
Well, thanks for sharing that. I mean, clearly, MDEC as an agency is really at the forefront of trying to drive such transformation. If I could maybe very quickly come to, Puan Sarah, if you could maybe share a little bit about what Bank Islam's perspective is, on some of the sustainable fintech trends that could be quite interesting, really.
Right. So in the Islamic banking space, we're trying to actually recreate or reinvent our business model. We know that in the green financing space, banks are actually limited by their capital to continue to lend to those who are, in need of sustainable finance. So this is where over the past few years, after the introduction of the Islamic Finance Services Act by Bank Negara, we're trying to reinvent our business model from being just a credit intermediary into an investment intermediary. Now, what does that mean? Now we're now giving accessibility not just to companies to borrow from banks, but we're also inviting our customers, or now we term it as investors, to have access to what is in our banking book, of which will then allow you a different asset class. Now, what this creates is that we want to educate our customers that they too can have access to the assets in our books, which are regulated by Bank Negara. So essentially drives us to create assets that are based on demand of our investors. So this is actually interconnected, right? We want to create demand, so if investors are looking for sustainable assets, we will create them. So lending is not just based on KPIs of shareholders or stakeholders, rather it's about what our clients want, what our investors want. So that's the type of business model that we're creating. I'll share more later, Renard. But one thing that I'm very proud of with Bank Islam is we also have a social finance vehicle called Sedekah House. Now this is interesting because This introduces blended financing, of which we allow the bank to lend to underserved market, those who traditionally cannot get credit from the bank. So this is interesting. It's actually funded by zakat and also our sadaqah or donation capital, which is something that is much needed, especially for the micro entrepreneurs and those who do not get access to traditional banking space. Last but not least, we want to create products that's not just going to be distributed by the bank, but we need to look at a different business model where our products are then made available on fintech platforms. So that is something that we want to continue to explore, and hopefully, from this session today, we get to see how else can we partner with the fintech companies out there.
Yeah, that's so wonderful. I will come back to you later when we deep dive into green financing and intersection with fintech. Now, I'll come to Wei-Han a little bit. If you could maybe share with us some of the examples or real-life experiences that you've seen on how fintech is actually driving change from your perspective.
Tremendously, right? No, thanks for the question. I'm Han. I run a company called Halogen Capital. Halogen is Malaysia's first licensed fund manager dealing with cryptocurrencies. So we run cryptocurrency funds. And prior to this, I've been a fintech founder for the last 14 years. My previous business was called Ringgit Plus. Some of you may know it as well. That was in digitalization of banking and banking distribution. So digitalization, the distribution of credit cards, loans, insurance, etc. And we've seen tremendous impact, right? So I tell a story when we started the business 2011. Back then, your experience of fintech, as it were, as a customer, was usually online banking. You would have like a Maybank to you or a CIMB Clicks account, and then you go and do some online banking. But pretty much everything else beyond checking your statement or making a payment was done at branch or through an agent, right? You would go drive yourself down to the branch twice a week for something or other. Either it's update your passbook or apply for a new credit card or speak to your loan officer or something. And I actually found myself going to a bank branch quite often, like if not monthly, certainly weekly. Sorry, if not weekly, certainly monthly. And over the last, take it for granted, but over the last 12 years or so, that's changed a lot, right? And we'd like to think we're part of that change, at least in some small way, that most people's experience with banking today is highly digital. In fact, just the last 12 months, the advent of digital banks in Malaysia has come up, right? Which, again, it's been coming a long way, and then, the digital banks in Malaysia is like a kind of a new milestone, a new post for this. And we can see the impact on society, right? Which is more people can get banking services with a lot less friction, and less friction means less movement, less requirement to go places, and still get stuff done. And ultimately, banking, I don't know, I'm speaking to a lot of bankers here, I'm a bit nervous, but banking should be very seamless, right? It's essentially a service rather than a specific physical product, so it should be highly digitalized. So that's what we see. And then on the Halogen side, what we're seeing is the ability to run, on one side, it's on the business side, we see an ability to run a business entirely digitally. We are not a robo-advisor, right? But we are certainly a highly digital-first fund manager. And what that means is we basically don't have paper, right? You can go on the website, halogen.my, sign up for an account entirely digitally, and we have no other, in fact, alternative. Like you just can't use paper, or rather, even if you did use paper, we'll just have to plug you into the system. And so that's one side. And the other side is that we invest heavily in the future of financial services, which is, you mentioned the word blockchains, right? Like ultimately, what's underlying behind a cryptocurrency is its blockchain and its protocol. So we invest very heavily in there. And there are many, many cool applications, not just in fintech, but also in sustainability that we can talk about that comes as a result of this industry. For example, earlier on, we were listening to IU's issue around demand underwriting for microgrids. That blockchain data centers, aka Bitcoin mining, is the solution for that, right? To underwrite the demand there. But I can talk about that later. So yeah, lots of areas with digitalization for sure, both at the business level as well as the customer side. and the actual industry that we're in, which is investing into blockchain, aka the future of financial services.
Wonderful. And Ian, I wanted to come to you as well, like your thoughts on some of the mega trends that are happening in the fintech space.
Sure. So I think one of to build on what everyone said here, the big shift I personally feel in the ESG space, sustainability space, is actually that it's becoming boring, which is, from a financial market standpoint, is a very good thing. That means that it is very understood, well accepted, and most of all, easily accessible to investors. So as we look at what Kenanga Investment Bank is doing, what we look at Islamic Bank, what MDEC is doing, and of course what Halogen is doing, we're making this accessible. Before, you would have had to go through a long process to get access even to some of these ideas, to some of these investable products or services. But now you can do it fully online, it's accessible, you can easily understand the risks and the benefits, and invest directly yourself without going through a lot of middlemen and middle distributors. So I think that's one of the best things, actually making it boring, makes it so accessible, and it's so easy for anyone to get involved.
Wonderful. I wanted to come to the two bankers, I guess, like on this panel, right? So we have obviously heard a lot of, the ABCs, the whole alphabet soup on green financing. There's green bonds, there's sustainability-linked loans, Sukuk Wakala, and all of these different products that have emerged, right? What is the take-up rate that we are really seeing, like in Malaysia currently? Are people actually subscribing to such, like green financing trends? And how does technology actually help facilitate the uptake of this? Puan Shafir, maybe I can come to you and get, your perspective on this.
Now, a lot of the products that we have in the market at the moment, especially in the capital market space, it actually benefits a lot of corporates, listed companies that wants to raise funds. And typically why they get to do so is because there's demand for such credit, demands for such names. We've seen more than 12 billion ringgit of sukuk in 2024 alone in the green bonds, green sukuk space, which is very encouraging. But what today I wanted to bring up is something a little bit different, a different perspective. Whilst there are a lot of demand on corporate credits, the concern that we have at Bank Islam is for the mid-tier companies, SMEs, or even green retail products, right? You see, essentially, what is made available, the instruments that is made available relates to the demand that investors have. And what we need to be able to educate the market now is that, firstly, you need to look at green sukuk or green bonds beyond the corporate space because, Malaysia has made a lot more of SMEs in terms of driving our economy, and there is limitation for mid-tier companies, non-listed companies and SMEs to actually access instruments. And investors are not comfortable to actually fund them, whichever instrument, because to me, whether it's sukuk, whether it's equity, whether it's green or not, it's an instrument. What matters is the underlying, the companies that's actually raising those funds. So what we hope to do at Bank Islam is that we want to be, you see, that's why crowdfunding came about, right? Crowdfunding allows the traditional companies that do not have access to capital markets to look for alternative capital. Now, I have I think it's good that we have different sort of players in the market, but this is where banks can actually play a role. We are regulated, we have credit history, credit scoring models or whatever not. There's always a debate whether it's restrictive, but that can always be worked upon. But the idea is now that we want to create a different sort of asset class where we have financing asset funding the mid-tier companies and SMEs and offer this to the investors to have access. Now, whether you come to Bank Islam or you go to Halogen or Kenanga, these are all market access platforms that will only be there if we continue to produce the right product. So at Bank Islam, what we're sorry, I'm promoting Bank Islam here, but I'm just also encouraging if there are any other bankers here. What we're trying to do is we we recently launched, and if you don't mind, what we call an Ehsan Sustainability Fund. The underlying asset is actually green asset, quality assets, and these are financing given to mid-tier companies and some SMEs. Now, what we have just created is that we are telling our investors, come to the bank, invest in this product, we will make sure we manage the credit, but you're actually funding the companies that do not have access to the capital markets. But we know how to manage the risk. But the idea here is that, you see, banking is about managing risk. What we need to then build is the trust of our investors to look at different credit beyond the triple A's, the double A3, and look at single A or even, just lower the credit curve, but trust the bank and give you a different sort of access. Now, what this creates is that the bank will then encourage SMEs and mid-tier companies to, think about greening their ecosystem, their companies, because there is incentive. The banks are willing to fund it, and investors actually want their credit. In the end, it is a supply and demand. We at the bank need to have more products such as this, so investors have access and we allow people to raise capital. So that's what we hope to create, a new asset class and a different sort of credit within the companies that we have in Malaysia.
Yeah, so really trying to focus on accessibility to such funding, right? Ian, or maybe Han, what are your thoughts? Is technology really helping to facilitate, financial inclusion as such, or do you sort of see a vice versa trend that's happening, contrary to what Puan Sarah has?
So I think the biggest driver is actually demand for these products. As long as there's demand for it, we'll still keep creating them, we'll still produce them, publish them, and get them to you. But as for everyone in the room, if you want to really see it through, you need to demand it from us as the banks and from fintechs as well, because we follow what you need. To that point, there is a big push for ESG, sustainable bonds and sustainable debt instruments and crowdfunding and so forth. But it still is a much, much more space to grow here in Malaysia, in ASEAN, and of course around the world too. So just keep asking from your bankers, give you good, sustainable products, and then we'll deliver it for you.
Right? Yeah.
The question was, can fintech really deliver inclusion, right? I think just going back on what I said earlier, in terms of, financing companies, you guys got it covered, right? Like the financing companies which are smaller and previously less included. Now you guys have really cool products. I guess in response to, crowdfunding and stuff like that, you guys are pushing that. That's great. I think for us, at least what we see is by offering our products online, right? And we benefit in Malaysia that we are highly included country from a mobile phone and mobile internet penetration, right? So the minute you're online, you have your services entirely online, available for any consumer, any rakyat. Previously, if you're sitting in a highly rural or suburban area with limited access to a bank branch, you can't get there in half an hour, less than half an hour. Limited access to an insurance agent, limited access to a wealth advisor. You can now, with a mobile phone, be included in those services that somebody in the city is getting because he can spend 5 minutes drive to his bank branch or 5 minutes drive or have his insurance agent come over for a coffee with him or something. So if you're sitting in a suburban community, that's where fintech really helps, right? Because you have internet, because we've got great internet penetration these days, right? Even in rural areas, right? And now with great internet, you have great financial services similar to what somebody in the city was getting, which you were not getting 10 years ago, right? But with services such as ours, and also with the banks that are offering those services, I think Bank Islamic, in fact, was one of the first digital banks in Malaysia. Not many people know this, right? With their BU product. And Ikananga has been big on digital for like 5 years, right? Way ahead of any other investment bank out there. If you have a phone, you are now included in a very broad financial system, right? With broad financial services previously that you could not have. You know, like today we're still celebrating when people get ATMs in their local community, which is great, right? But more importantly, the minute you have a mobile phone, you have a smartphone, you have a handphone, right? With internet, you can get pretty much any service that a highly developed city dweller like us here can get, right? And that is true inclusion.
Yeah, I think that's wonderful. I think we've touched quite a fair bit on the inclusion or the social impacts, right, that fintech can actually help drive. But what about the environmental side of things? You know, as an environmentalist myself, you know, I follow a lot on climate action, the amount of carbon emissions that have actually risen as a result of, you know, the use or the deliberation on such technologies, digital payments included. What are your thoughts like on this? Like, are we sort of driving and maneuvering towards the right direction in terms of being more eco-friendly with some of these transactions? What's really happening in this space? Yeah, maybe anyone within the panel, like.
Sorry, if I may,
Sure.
yeah. I think what is much needed to ensure that we, spur the market in green sukuk or green credit or whatever you name it, is how we look at data differently, right? Because if today, traditional credit where we give financing to corporates or SMEs or whatever companies, we look at cash flow, we look at, project risks and things like that. But now, I think where fintech can actually play a role is work with the bank to think about how do we predict climate risk using data? And what kind of data do we need to actually look at? I think that would have more access to all this innovation. Probably banks need to broaden our horizon. We need to look at because demand from investors is really on their ability to assess risk, right? How do we allow our investors to know? Because a lot of the financing that we do in the green space is long-term, 10 to 15 years. And in the market that we are in today, nothing can be predicted more than 3 years or even 2 years, right? Look at COVID, look at all the climate change or climate risk that we're facing at the moment. So I believe there has to be some innovation there because to be honest, banks, we rely a lot on assessment and reporting that's provided by third party or even the client themselves. But even then, those data is a bit lagging. So we need to be able to innovate in that space so we can understand the impact to the project that we're financing, and even reward our clients from the KPIs that they reach, and make credit more accessible and more affordable. So I'd like to see that. And if there are people in here who are innovating in that space, please contact us at Bank Islam.
Wonderful. Okay, I think so. We have basically covered a little bit on the environmental, the social side, and of course, we cannot forget the governance pillar, right? So I want to come to Dr. Fazli on this subject, right? To really ask, how does MDAC really work with regulatory bodies to ensure that there is a balanced approach, right, when it comes to things like innovation and regulation, while also trying to, achieve that balance with, trying to hit sustainability objectives?
Okay, with regards to our, whatever we're doing, vis-a-vis the regulatory part of it or the policy part of it, all our programs for digital finance or even other programs itself, cutting across all the other sectors that we have identified, are in line, basically, this is for digital finance, yeah? Basically aligned with the Bank Negara Financial Sector Blueprint 2022-2026, in which the blueprint itself states that the financial inclusion is very, very much prominently featured. And this is where we are focusing mainly on the, like what Sarah was mentioning, on the underserved sectors or the market itself. And on top of Bank Negara's Financial Sector Blueprint itself, we are also aligned on all our programs with the Security Commission's Capital Market Master Plan 3, which is between 2021 to 2025. And this is where it states that everything that we do is taking into account on the expansion of the Islamic capital market. And this is where we had introduced programs or initiative or even pilot programs like the alternatives credit scoring that will benefit the underserved as it is. So I think this is basically much more onto looking from the benefits of creating much more opportunities for the MSMEs moving forward in a sustainable manner. So alternatives credit scoring is one of the programs that we are doing. This is a collaboration in which we sign an MOU between CGC and PayNet. So CGC will basically look from being the guarantor, as well PayNet from the payment system itself. So we are undertaking a number of pilot projects for this particular initiative itself and hope to roll on full momentum as we go by. So that's basically our initiative moving forward.
Yeah, that sounds really, really wonderful. But thoughts from the panelists here. Do you actually see this regulatory frameworks as supporting, or is it hindering, some of the objectives that you're trying to achieve in terms of innovation? Han, maybe I can get you to weigh in on this. Yeah.
Sure. I think, just to be clear, on our side, we're a fintech company, but we're also a fund management company, which means our license is, I guess, governed, regulated, monitored by the SC, just down the road here. And they have very clear frameworks on fintech and how you want to innovate within the space. I find them honestly sufficiently on the side of innovation, right? In fact, there is a team there in the SC, right, dedicated towards innovation, the digital team under Dr. Wong, right? She interfaces with us, a lot. And then, obviously there are supervisory functions within the regulator who make sure those frameworks of those guidelines or those policies or those rules or those laws are being abided by. And then translates, innovative ideas or projects that we're doing with the regulators head on, right? So she's the interface. In fact, like one of the ways that they are extremely pro innovation is that they actually have a fund for innovation called DIGID, Digit, right, which helps smaller companies such as us, fintech companies, innovate within the capital market space, right, and go like, hey, you're in fintech, you deal with investments and investing stuff, and I want to encourage more innovation in this space, so I'm going to set up a innovation fund. We co-sponsor it or we co-fund a project that you're doing. So one of the projects we're doing is, getting our unit trust funds on a blockchain, right, and tokenizing our funds. That kind of thing we wouldn't have done without without being co-funded by the SC. So if to give you a sense, right, how supportive our regulators of innovation vary, and they just talk about it. They actually put their money where their mouth is, right? So I guess that's hopefully that answers the question in terms of supportive of innovation versus regulation.
Yeah, and Ian, here.
Sure. So I view regulation, policies, procedures as the guardrails that drive innovation. So it's within that framework we can do it, right? So it helps thinking of a picture, a blank picture with just a lines on it to color in. That gives you the picture you need to fill in. We have to remember that these regulations, the policies, procedures, they're not there to stop innovation. They're there to protect customers and to protect the markets as well. So by having them in place, we can give more confidence to our investors, to our customers, our clients, that we're actually working within a strong, robust framework that has their best interest at heart.
Wonderful. Maybe I can also get some thoughts from the panelists, right? Like, what would you say are your top challenges in trying to navigate through this landscape? Yeah, maybe I can start with Sarah. Maybe challenges and then opportunities as well.
So does it have to only be one, or I think in our case, it's really our customers, our investors, right? There has to be, because we Malaysians, we have a lot of lazy capital. We tend to want to place our money in fixed deposits. I'm sure this is familiar to many, right? And for the Bumi Putras, we have the ASB and the Tabung Haji. Everything has to be principal protected. But in essence, when we do that, it's actually hurting the bank and our shareholders, the reality is, if you want to get better returns, you need to take some risk. There are very well-informed investors. That's why we go to unit trusts, mutual funds, and explore this type of investment instruments. But we need to be able to get people to stop putting money in fixed deposit alone and make sure that we invest that capital and get rewards based on using whether fintech or banks, and look at other instruments. That's number one. Number two is that we need to educate our investors to invest responsibly. That means that when you as investors demand that your money is actually going for sustainable investments, that's where banks and, whether fund managers or even other institutions will start creating these sorts of product. And that's how we can actually save our environment. But I just like to put this forward, right? When we talk about sustainability, we often think about green. But in our part of the world, do you know that's not the main issue? It's actually governance and the social part of it. And one of the things that we struggle is actually about human rights. And that is something that us investors must make sure that as we invest in instruments like the capital market instrument, whether it's equities or fixed income, or even investment account at Bank Islam, we know what we're looking out for. What are the human rights issues? It's as simple as, preparing an accommodation for workers. And that's something we're actually not educating ourselves. I hope people in here are very aware, but a lot of our conversations has been about green. We've not really talked about the fundamental issues in our part of the world, as I mentioned, about social issues, governance. But we continue to put in money in equity markets, not knowing what they're actually doing, for example. So that will be the main challenge. The opportunity, as I said, once there is demand, that's where opportunities will create by itself. It's a supply and demand thing. So if you demand it, we will produce it. And that in itself will make the market more efficient, and hopefully we will reach our goals together. So very philosophical today, but
No, I think that's great. Like, that's a good start. Maybe we can come to Han and then Ian.
What challenges I personally face today? I said earlier, I run a licensed fund manager running cryptocurrency funds. So one of the biggest challenges I face, other than the having to re-educate everyone about, pros and cons about this asset class, is how do you balance between innovation and security, right? And obviously we operate in a highly licensed environment, so security is the first thing we care about, and that makes us comparatively less innovative than your e-commerce, your ride-hailing, your every other business. And fintech suffers from this as maybe not suffers, not the right word to use. We have a burden that we have to bear because we handle people's money, right, and people's trust, right? And it's fair that we bear this burden, right? But it's a big challenge, right? How do we make sure we maintain innovation, maintain the pace of innovation, make sure we're at the forefront as much as possible, while staying true to principles of, you're looking after people's futures, their wealth, their payments, their loans, their investments, right? That has been the number one thing, and nothing else. You can, as in, if there's any innovation that even risks any part of this, you can't do it, right? So for us, number one challenge is to ensure that, no matter how innovative you want to think, you always have to bring it back to, we're in fintech. That means we're innovating with people's money. We're innovating in businesses that involve people's money, and that you have to watch very, very carefully, right? And become the stakeholders, the fiduciary responsibility people that they expect you to be, and not just trailblazing and breaking things. You cannot break things as a fintech company, right? You can never break things, right? That's unlike any other tech industry that you hear of today, right? Move fast and break things. That doesn't happen in fintech, and it shouldn't happen, and so that's a big challenge for us.
And Ian.
Or to build upon what Han said there, that burden is very, very real because it is our real customer money at the end of the day. I mean, it very well could be your whole life savings. We can't lose that by accident, right? But so I'd say the greatest difficulty, greatest challenge we face is actually the same as our opportunity. It's getting the right product to the right customer at the right time with the right risk profile to it, the right risk assessment. So being able to give you those types of innovative and ESG-focused products is critical. How do we get that to you in the right way that makes sense for you, investing into your portfolio in the right way and makes sense for your long-term goals? I also like to, as I build upon it, that it's not just environmental, but actually it's social, it's governance, I like to think of it more as impact investing. It's investing in things that really matter to you, what you believe the future will be, whether that's life sciences, whether that's technology, whether it's cloud computing, or whether that's governance, whether that's social features and so forth. I remember just researching ETFs recently. There's some really interesting ones that are coming out in the US around like equal representation of men and women on the board members as being the key criteria to be included in the ETF. So you can do really interesting things with these financial products, way beyond an FD, right? FDs are so boring. Go for the more interesting products. But anyway, we need to innovate. We need to bring you those products. But at the same time, as investors, you need to ask bankers, ask the fintechs, ask the government agencies to help bring these to life.
That's so wonderful to hear from you. Dr. Fazli, if I may come to you, yeah, I would like to find out a little bit more, perhaps, like on how MDAC is also facilitating, right, that sort of collaboration, that opportunity between fintech companies and also the industry.
I think back to the question about the challenges just now. I think the biggest challenge that we have as a development agency promoting digitalization to the market and industry itself, one word spells it out very clearly, which is adoption. It is very difficult for the market not to see the benefit of any adoption with regards to any new technology enablers that we introduce until they actually have a feel of it, until they see the real benefit of it. And we're talking here about like the one that I've mentioned about our alternative credit scoring program, which is basically filling up nearly, I think it's about 90 billion financing gap nationwide. And this is assisting the so-called Makcik Kia or the burger boys on the ground itself. When we roll out new technologies from the collaboration that we're having with PayNet as well as CGC, it's difficult and it's very challenging to entice or to convince the MSMEs as to the benefit that they will, they are supposed to get at the end of the day. It allows, I mean, there's a lot of benefits that we can see from, getting them to be financially literate, giving them the tools to be, getting into the digital space, and so there's so many benefits. But when it comes to adoption, a lot of effort that needs to be undertaken by our ecosystem players to convince the MSME players to basically adopt, and hence that's basically the biggest challenge that we see. There are ways of doing it, but it isn't a cookie-cutter approach that we can adapt to, the burger boy type versus the Makcik Kia that sells nasi lemak in the morning, and they can never see the end benefit of, being financially literate will allow them to cater for the application of conventional banking type of loans and later on. They still need to have, seeing and believing, that's the concept, and then only about a lot of convincing that's been done, only then that they could be able to accept a bit of our adoption programs.
Yeah, that's such a wonderful perspective. I think it's appropriate for us to maybe take a pause and see if there are any questions, Q&A from the audience. Don't be shy. Feel free to put up your hand. I believe there should be a mic that circulates around. Any questions that you'd like to pose to our panelists today?
There are some questions submitted by the audience members via Slido. The most popular ones are at the top.
Yeah. How about we start with the first one? What do you think is the main challenge that SMEs have when it comes to assessing sustainable finance? If there's anyone from our panelists would like to take that.
Can I turn on that? Okay. Look, To begin with, I don't have much funds. My business is very costly. Why should I even think about green if there's no reason to think about that, right? So it's affordability. And the urgency is not there. So that's why we need to be a little bit more creative in making the adoption to be faster. I can't really speak for MSMEs because, you know, they're not really contributing to a supply chain. But assuming SMEs that's, you know, part of a bigger supply chain, there are a lot of anchors, it is very important to work with the anchor. The anchor themselves need to set that standard, and then the banks can come in to give them a reason to, you know, green, to do more green, to do sustainable practices. And we're ready to finance that. Essentially, at the moment, it's not that funds are not available. Bank Negara, CGC, there are a lot of funds out there that's actually being supported by the regulators and the government. But there's no urgency, and they don't see the reason why when they have other priorities. So this is where it has to be a partnership model, where we need to work with the anchors, the main contractors, the ones that's actually, that they have a reason to green their supply chain, and banks will have to come in to actually offer those instruments. So that's how we hope to fix the problem along the way.
Okay, shall we go with the second most popular question, which is, what do you think can help accelerate innovation and how we actually assess climate risks in Malaysia? And how do we actually localize this? Any brave takers from the panel?
I think I'm able to address the first part of the question. How do we accelerate innovation? Now, when we come up with any innovation, especially with our high catalytic projects that we have identified under one of the programs under MDEC, high catalytic projects are supposed to be projects that can turn around the industry as a whole. These are basically looking into when we turn around the industry, it is able, like I mentioned just now, move the needle in terms of the GDP growth. In order for that to happen, there's a few elements that needs to be taken into consideration. First of all, are there adequate talent, sufficient enough to move the market forward? Talent is one of it. Second, are there enough or sufficient fundings available in the market to allow to accelerate the innovation or the commercialization of the product or services itself? The third one, what are the regulatory or policy rules that we need to intervene or bring up to the government or agencies like MDEC to intervene to allow for the industry to move forward, and what are the changes in terms of, you know, the policies that we made, and hence why our role in MDEC itself has always been looking into or engaging with various stakeholders, industry players, to understand what are the grievances, what are the challenges that you need for them to accelerate the market or to accelerate the ecosystem moving forward. And hence why funding, talent, and regulatory and policy issues are basically the main things that can accelerate the innovation of any services and programs.
Yeah, and they're totally applicable to, even from the perspective of climate risk, right? From a policy perspective, there's the Energy Efficiency Conservation Act, and even the government is looking at the possibility of enacting a climate change bill that's upcoming, right?
Yeah.
Looking at how we can address mitigation and adaptation issues.
Just to add a bit on, we have, I'm not so sure, in 1996 when we have companies applying for our MSC status, which is the Multimedia Super Corridor status, and now has been rebranded to become Malaysian Digital. So we have about, I think, close to 1,000 companies that's already been brand up under the MD status companies. And when they apply to become MD status company under our banner for MDEC itself, there would be a criteria for them to fill up in terms of any sustainable efforts that they have in plans. So those are basically some of the the initiative that we have. It does carry some weightage for them to apply for our MD status, and it allows them, if it gives a lot of efforts that have been put into the plans for the next 5 years throughout the MD status period, it will carry some weight for them to get our MD status application approved. Yeah.
Like, wonderful. Maybe we'll have an opportunity to take one more question. So I really like this one. I think I probably know what the answer is, but I'm curious to find out what the panelists would say. So there are many transformative initiatives that may be needed for regenerative, economy realization. Such initiatives may never be profitable. What is the space for zero returns, flow funding?
So I like this question. I was trying to raise my hands and want to answer this. So as I mentioned earlier, in Bank Islam we have Sedekah House. Actually, there is alternative capital. It's not just about deposits or investors' money. In Malaysia, we have what we call philanthropy capital in the zakat space, in the donation space, the sadaqah we call it in the Islamic finance term. So even endowment funds or wakaf funds, right? But all these funds are actually not being put together and being channeled to productive economic purposes. So what we did in Sedekah House, so Sedekah House is actually a unit under the bank. So we know that if it's a standalone, there's always a question about, is this real? Who's paying the cost? Is it regulated? So it was deliberate that it's actually part of the bank's ecosystem, because we wanted to give people comfort that there is a responsibility of disclosure and tracking where the money actually goes to. How it was actually, what we did is, instead of putting up profitable targets, it's actually looking at the productivity of how that capital is deployed. So what do we mean by productivity? So we now have a microfinance business that is under Sedekah House. It's not even business, it's actually a microfinance agenda. It's actually championed by also Bank Negara, and we also have those that we're doing it on our own. We call it iTekad. And what we do is actually we deploy to these funds that is not based on, that's not actually affecting the bank's capital, nor is it affecting the bank's asset quality targets. What we do is actually we deploy this for micro SMEs based on benevolent financing, or what we call Qard Hasan in the Islamic terms. And the way we measure is the upward mobility of these micro SMEs, and that's often not being discussed. We give money, there's no facilitation, and at Bank Islam we target for all these the micro SMEs to actually upgrade to the banking system and grow so that they can be bankable. So those are the type of targets. It's changing that target, and it's available. Now there are actually a lot of funds out there beyond Bank Islam Sedekah House. But what happens is that fund goes into the system, but it's never been measured as to how that funds are being utilized. And that becomes a problem, a systemic problem actually, if you ask me, and that's why there's no progress and in terms of that space. Now the other thing that I want to talk about is unrelated, but I thought I wanted to also speak about, is actually our digital bank, which is known as BU. It's nothing major, very little products on that platform still. There's a lot more that we can put in. But what we wanted to do was actually, again, access the underserved. First, start with their savings behavior and understand their behavior in how they put their money in the nest. Then start to look at alternative ways of looking at their credit worthiness, hence then deploying financing. Now, if they're able to pay, then it tells you that you can actually give them more access and more credit. So it's nothing new. I'm sure there's a lot of innovation out there, but that's one thing that we're looking at as well. Because we often think about how people's ability to pay, but we never think about how are we actually empowering people to save money so that they can pay their credit. So that's what we're prioritizing. So these are the two things that we're looking at as well.
Ladies and gentlemen, there you have it. Please join me in thanking four of our esteemed panelists, Dr. Fazli, Puan Sharifah, Sarah, Han, and Ian, for their wonderful insights and inputs.